Okay guys, today I'm going to show you a little strategy I'm using to get back at the banks for stealing everyone's money and lending it out and then losing it, because that's what they do in fractional reserve systems. So as you can see here, these two Soyjacks are trying to teach you the ways of the bull and the bear, or whatever, See, listen to Soyjack. Look at this target index. Look at this IXMTR. See, obviously you want this. Look at these Soyjacks. They're telling you to get this. So now that we've established that these Soyjacks are here for your great benefit, we're going to take a look at what this ETF actually has inside it. So I'm going to be talking about FAZ, which, obviously that's a 2564 E240 or whatever, obviously, since we can see that here, and that makes total sense. Anyways, the only thing that matters to me is that it's negative 300% leverage on these companies, these assholes that take your money and lend it out to other assholes so those assholes can lose it, and that these are the sectors that this ETF trades. So it's a third banks, a third capital markets, which is just like who the banks give your money to, insurance, anyways, all things your parents probably know about. But we're not really interested in capital markets. I mean, we kind of are. But okay, so Bank of America, which is a large percent weighting of this. I mean, overbought. Berkshire, approaching overbought. JP Morgan, definitely overbought. Goldman, overbought. BlackRock is about to steal all the homes, overbought. I mean, it won't be stealing because they're just going to destroy the housing market and then buy them all while they're low, because they are part of the capital markets. BlackRock is a capital market that is going to, that's a whole separate video. But so anyways, I am sharing a strategy. If you're like me and you see this data, you're like, oh wow, all these banks are pumping right now because the Dow and the S&P is just like, taking off. If I can get the Dow up, if I can remember where I put it. Yeah, so the Dow is like shooting way up. Look at this bear market rally. Like this one, it's just like this one. Look at this. 15% rally during a bear market. Probably going to be another 15% rally. Anyways, it's way overbought. And these indexes are comprised of smaller stocks like these. Smaller, I mean, as in market cap. I don't know if the Dow is. I'm sure there's a financial indice. Maybe I can look that up later. But anyways, I'm waiting for these bear shares to make it deeper into this regression line right here, because that's when your deep value zone is to actually buy it. So I'm probably going to have a buy maybe right around $20. So $1. It's $1 away. And then I'm going to hope, that these things adjust, because these are all overbought right now, and so are the indices. And it's also psychologically, I can't say that word correctly. You know what I'm trying to say, psychologically. Anyways, in that method, it feels real good shorting these assholes. So that's another reason why I wanted to share this trade with you, because basically rich people and politicians constantly steal from those lower than them, and they just constantly dunk on them. It feels like every like 2 or 5 years or so there's a new fucking reason why the economy is crashing. So like this is BlackRock. I don't want to show you BlackRock, but since we're going off on a tangent now, it's like every couple of years there's a new bullshit concoction that they steam up and poop out. So like here's the top of the financial reset. That's what I'm calling this. As about a year ago, there's COVID right here I don't remember what these are. I was probably doing something else. What do we have here? These aren't really big drawdowns. What I wanted to illustrate, yeah. So here's a financial housing crisis. So if you were like a zillennial like me, you know, you basically, let's get rid of this bullshit. You've basically grown up in a period where the economy seems to be ripping upward. It's ripping upward for, oh wait, where are we? We're in the wrong decade. Here we are. So zillennials, sort of born around here. This is the turn of the millennium right here. 99, 97, 98. You know, it's literally every like 5 years you have a massive crash. And it, you know, it's super easy for a boomer who got in the market way back here in 72 to say, oh, I don't see what the problem is. Why don't you just buy some gold and silver and just be happy? And well, you know, a lot of the people I feel like on YouTube that watch these types of videos, they don't have the luxury of this going on, right? They don't have the luxury of that. Okay, obviously the 87 crash was bad, or whenever this was. What is this? Oh, 29, that's the Great Depression. Yeah, so never mind. Here we are. Yeah. If you're a boomer or a Gen X, basically like, here are the millennials, zillennials, and what, Gen Z, market crash. Oh my gosh, let's get so leveraged. Crash, and then this one I think will be even bigger. I think we'll go back down here or something. Anyways, that's all conjecture and just sort of anecdotal evidence. All suffice to say that right now, I'm planning on more bank runs because they're already happening. Oh, this is kind of interesting. Bank of America. So Bank of America, since the housing market bubble, pumped all the way back up to where it was before the bubble, and then it just got rejected off of it. So this is hilarious. I would think that it's coming back down here, somewhere in here, because really price is just a reversion to the mean. So like, what I mean by that is the price action itself is just seeking to find the average of all prices for a given set. So for your given set right here, you have prices since 1973. Price is just trying to find the average price of all these prices at any given time. Right? So I would think that the average price within this channel, okay, that's not really a great channel, but I don't know, maybe somewhere along there. I don't really know, you know. But the point is, the banks themselves never even recovered from the last gigantic crash. So what do you think's going to happen this time? I mean, that looks pretty obvious to me. I mean, you go pump up, and then you crash, and then you pump up, and then you crash, and then you'll probably pump up again, and then you crash, and then you pump up a little more, you crash a little, and then you finally get out of this range. But, I mean, you could be following these trend lines for all of eternity. And obviously that went off on like a huge tangent. Anyways, fuck the banks. Buy this short ETF. And exude maximum profits. Get maximum tendies, because everything I say is gospel, and I can do no harm. Okay, obviously, if you thought that was serious, you have some problems. That was sarcasm, not financial advice. I hope this video was helpful in some way. Peace out.